Over the last 5 years, I have trialed and tested so many different strategies to manage my money. And I've done that because understanding how to manage your money and be in control of your money is one of the most important life skills we can learn today. It doesn't matter if you're making 50,000 or 100,000 a year. The number one thing that makes a difference is how you're able to manage that money. And the real skill of money management is about making the most of the money that you have, not just for investing and for growing wealth, but instead to find the perfect balance between living in the moment and planning for the future. When you find something that A, is easy to do, and B, is easy to maintain, then managing your money stops feeling like a chore. So in this video, I wanted to talk you through my 3-step method for effectively managing your money in a way that makes you feel in complete control of what is coming in and out of your account every month. I'll also give you some of my favorite tips along the way. If you want to use the same template that I have created, then in the description box, you can find completely for free the link to download and use this to incorporate for your own finances as well. Okay, so this is what the tracker looks like. It's got the color-coded spending categories, the income section at the top, and then the overview on this table over here. So these cells will change color as you start filling in the sheet. You'll see in just a moment. You just have to click File, make a copy, and then you can duplicate it and use it for yourself. Now, step 1 is to define the 3 F words. Wait for it. A key part of being in control of your money is defining where you want to go. But before we even do that, you need to first figure out exactly how much money you're bringing home each month. So this is the amount that lands in your bank account after tax. If you have multiple income sources, you want to include all of them in here. Your 9-to-5 day job, your weekend gig, your freelancing work that you do on the side, maybe some investments that are paying off. Whatever these numbers are, you want to put them in the top left blue section over here. For example, if I'm making 3,000 a month after taxes from my day job, I'll put that here. Another 200 a month, let's say, from my creative side hustle, and 500 a month from freelancing. So you just plug in those numbers at the top. Now, if you're employed, the number is pretty straightforward. It's the amount that lands into your bank account each month after tax and other state contributions have already been deducted. So in this case, that's the 3,000 a month. But if you already contribute towards your workplace pension, you actually want to add that number back in. So if you contribute, say, 200 a month towards your pension, add that 200 back into this. And so that number would instead be 3,200. The reason for this is because the amount that you're putting towards your pension contribution actually goes towards the future you category, which we'll come to in a second. Now, if you're self-employed or you're a freelancer, you need to take into account taxes. The last thing you want to do is assume you have all this money coming in and define your goals on a higher number than you should, and then be disappointed when you don't hit your goals. So in this case, the 200 from my side hustle and the 500 from my freelancing work, that is after tax. Once you put those numbers in, your total income is calculated. Now that we've done that, we can define the 3 Fs, the fundamental bucket, the fun bucket, and the future you bucket. You want to decide how much of your net income, so the 3,700 in this case, you want to put towards each of these buckets. The funds allocated to the fundamental bucket are dedicated to your essential needs. These are the non-negotiables of life: housing, transportation, food. Money placed in the fun bucket, those are the costs that enrich your life with joy, with experiences. And then lastly, everything you put into the future you bucket, that is an investment towards the life you envision years down the road. In the world of budgeting, there is a popular guideline that you may have heard of called the 50-30-20 rule. It suggests that 50% of your net income should go towards the fundamental needs, 30% should go towards the fun bucket, and 20% should go towards the future you. So those are the percentages that I'm going to put into this column right here. So 50% towards fundamentals, 30% towards fun, and 20% towards future me. And what you'll see as we start filling in the sheet and putting your numbers and your actual spending in, is that the colors of these cells will change depending on whether or not you're in line with your goals or if you are overspending or undersaving. I do want to make a quick point here actually about the 50-30-20 guideline. It was introduced in 2005 in the book All Your Worth, The Ultimate Lifetime Money Plan. And so it was during a different economic landscape. Over the years, we have seen inflation, rising healthcare costs, increased student loan debt, fluctuating housing markets. All of these factors have really impacted people's disposable income and the proportion of their income that goes towards their fundamental needs. So you may want to modify these percentages and tweak them based on your unique circumstances, but we'll go into this. Step 2 now is the month at a glance. So you want to start filling in the 3 color-coded columns in the middle. So the fundamentals, the fun stuff, and the future you. The fundamentals, like we said, are the non-negotiables. They are the fundamental things for your day-to-day living. So this includes things like housing, your rent or your mortgage payments. It includes utilities and other bills. So we're talking about water, gas, electricity. It includes transportation. So your car payment, train tickets to get to work, or any other mode of transport that you pay for. Groceries would also go into here, insurance, minimum debt payments for your debt obligations. And you want to find what you spend on each of these by looking through your bank statements. So your debit card statement, your credit card statement, or any apps that you use. It may be that your app automatically categorizes your spending for you. So maybe all your utilities come into one. So you can put that one number as a total, let's say 200 into this cell over here, or you can split it up. So break it down by water, gas, electricity. It depends on how detailed you want this to be. When it comes towards spending towards your needs, you want to, as much as possible, have this automated, have direct debit set up so that everything is getting paid automatically. The more friction you can take out of anything, the more likely you're able to keep that thing up. The last thing you want is to receive constant monthly reminders to pay your bills, and then you need to remember your password, log into your system, enter your bank details, manually transfer each month. It's just not fun. And these kind of things make managing your money a chore. It creates unnecessary friction. So once you go through and enter all these numbers, so let's say 1,200 for mortgage, 100 for utilities, 30 for phone, and you keep filling in these numbers, you can then check the table on the right, and that will immediately show how you are doing in relation to your goals. So I had set a target here of 50% of my net income to spend towards the fundamentals, but this cell here has turned red. So I'm clearly exceeding that threshold. So then you need to reassess that goal, and that's something we'll come to in step 3. And this column, by the way, at the end, it shows the actual amount that you're spending in the currency that you're spending in. This way you have a clear idea of both the portion of your income that you're spending in terms of percentages towards each of these categories, but also the exact amount you're spending as well. Then we have the middle column, and that is the fun stuff. Now you want to be really clear with yourself here. You want to clarify these categories from the outset. You really don't want your fun stuff creeping into your needs just to justify some spending. So the fun bucket is all the things that are not essential. These are the things that at their core are completely optional. So examples of what can fall into the fun category include subscriptions like Netflix, Spotify, Amazon Prime, entertainment, so things like going out to the movies, eating out, getting that round of drinks, self-care, so things like your nails, facial, haircuts, and traveling. These are all examples of what falls into the fun category. The fun bucket also includes those upgrade decisions that you make. So if you're buying a Mercedes instead of buying a more economical Toyota, or if you're shopping at Marks and Spencer's instead of Tesco's, or getting a gym membership instead of working out at home, those are all upgrades. They're little extras that you spend money on that makes life more enjoyable and more entertaining. So you can see a few more examples that I've put in there. And again, you could split it out. So I've got clothing as spending 200 in that category. You could split that out and make it as detailed as you want. You could have a line by line jumper, trousers, or whatever you've bought in the clothing section. Everything could go into here. Once you fill in all the categories for your wants, as I've done here, the table on the right, again, will signal whether you're on track or whether you need to cut back once again. In this case, I'm spending 25% of my net income on my wants. So the cell hasn't flagged up. I've got some leeway. I've got some room to spend more if I want. And then the third column is the future you bucket. And this is all about paying yourself first. There are a few ways you can do this, but I always recommend setting up automatic transfers from your bank account that you get paid into a separate savings account as soon as you get paid. Again, when you create a system that works for you, you remove the need for willpower. You remove any friction, and there's no excuse not to save. You don't get to the end of the month and realize you don't have enough money to be able to save like you said you would at the start of the month. All of that push and pull just disappears. In this category, you can include things like investing in stocks and shares, topping up your emergency fund, and putting money towards your savings funds. If you're not sure where you should start and in which order you should put money towards, I have a video right here that explains step by step where you should be putting your money and in what order. When it comes to your savings fund, I would also recommend having a separate account for each of your bigger saving goals. So if you're saving for a house, have a house fund. If you're saving for a car, have a car fund. Have them all with specific purposes. That way you're keeping them separate and you could easily just log into your account and check what the balance is and how far off or close you are to that goal. It's a lot more motivating than having it all in one as just a savings pot. So the cell right here for the future you category, that works in reverse. If you're contributing less than the amount you initially planned for the future you, the savings and investment bucket, then the cell will turn red, indicating that you're not saving enough. And then we're on to step 3, and that is the reflections, arguably the most important part. There's no point in coming up with all these goals and all these plans and thinking big if you don't stick to them or take any action. Before payday, you want to go through the tracker and reflect on your spending. So a couple of questions you can consider and ask yourself is, have you paid all your bills on time? Are there any late payments? If so, why? Can you set that up to be automatic? Are any of the cells red, meaning either you spent more than you should or you saved less than you should? If that's the case, why did that happen? What did you spend it on? If it's that you're spending too much in the fun bucket, then are there ways to get the same thing for less? Or is it that you simply need to reassess and cut some of those things out? Or maybe you spent less than you thought you would in your fun bucket, in which case you could increase maybe your savings and investment section. You could pay more towards yourself and pay off your debt faster. It might be that this is the first month that you're tracking your spending, in which case these percentages might need some tweaking to make it something that is more sustainable over the long run. Instead of just like plugging the numbers and closing it and getting on with your life, reflect at the end of the month and see where you can improve your finances. Once again, if you do want to download and use the same one that I have, it's linked completely for free in the description box below. If you do use it this month, come back and tell me how you get on. I'd love to see what you thought and how it helped. Thank you for watching and see you next week.